Hey, what's going on, real estate investors? This is Aaron Nelson, founder and principal of White Coat Holdings. We're a multifamily investment company that buys large apartment complexes all throughout the United States. And I'm here today to talk to you about what might be in store for multifamily apartment investors in 2022. You know, 2021 was an absolutely fantastic year for apartment investors. We had all-time highs for rent growth and price appreciation in many markets. So today, what we're going to do is we're going to take a look at some macroeconomic trends, at some charts, and we're going to try to forecast what's going to happen in 2022 and in the coming years. Is the party going to keep rolling, or is the music about to stop? Let's dive in. To set the stage for our discussion, if you look at the underlying fundamentals of housing supply and what's going on in the economy, a lot of the same factors that made 2021 a rousing success for apartment investors are still prevalent today. In addition, employment levels are increasing back to pre-pandemic levels, and eviction moratoriums are a thing of the past in most landlord and business-friendly states where we like to invest. Now, let's get into 4 trends that we are seeing that will impact apartment investing in 2022. The first trend is one that many of you are already aware of, and that's that home prices are skyrocketing in most major markets across the United States. As the cost to buy a home increases, and as interest rates are set to increase later this year in 2022, the buying power of most home buyers decreases almost by the day. In addition, the affordability gap between buying and renting grows. So what does this mean for most multifamily apartment investors? Well, there's likely going to be a healthy supply of renters who need to continue renting for a longer period of time. And that means there's going to be a high demand for great apartments in great locations. The second trend is that high demand plus low supply equals low vacancy rates. Many of you have heard of the labor and supply shortages that have impacted construction materials like appliances, countertops, and cabinets all across the United States. This has actually slowed the delivery of new apartment complexes and has led to a very high absorption rate, which is the percentage of new apartments that are being rented. Since there's high demand for rental housing and low supply, vacancy across the United States is actually projected to be less than 3% nationwide. That's crazy. The last thing I'll mention is that these shortages have also caused the price of creating new apartment complexes to skyrocket. And as these costs increase, it's pushed the target rents and the target sale prices that most of these developers have looked to achieve. This increase in pricing has impacted not only new A-class apartment complexes, but also B and C class apartment complexes like we invest in. The third trend is that we are seeing significant population shifts across the United States. This is creating high demand for housing in certain housing markets, causing rents to grow at a very rapid pace. The graphic shows which states are benefiting and which states are losing. You can see that Sun Belt states like Arizona, Texas, Florida, and even Washington are big winners, while high-cost areas like California, New York, and Illinois, along with the Midwest, are not doing so well. The areas with high population growth that are landlord and business friendly are the ones that we like to target for apartment investing, and we expect these areas to do very well in 2022. The fourth and final trend I want to cover today is favorable monetary policy. Sure, interest rates are set to rise in 2022, but check out the graphic on the screen. As of January 2022, the United States money supply has increased by over 70% since the start of the pandemic. We're up to over $6.1 trillion, and that's just in the United States. There's trillions more out there sloshing around in the global economy looking for yield. And right now, the U.S. multifamily market looks pretty darn good to a lot of investors. So sure, interest rates will probably rise in 2022, but not as high as pre-pandemic levels when multifamily investors were still making money and cash flow. And we've got a whole lot more money out there searching for yield and chasing these multifamily deals. So for that reason, and the reasons that I've previously stated, we're very, very excited about apartment investing in 2022. Thanks so much for watching. I hope this content was helpful for you. For more great information, please visit www.whitecoatholdings.com/learn to learn more. Thanks so much, and I hope to talk to you soon.